Welcome to the State of the Nation business. And today we're going to look at the Corion Report. And once again, we've got a theme. And most importantly, we've got the man himself sitting here for the first time in studio, Corion Report's own David Bacher. David, welcome to State of the Nation business.
Thank you, Mark.
Let's have a look at the Corion Report for this month, where you look back and you always pick a theme. Last month we looked at the Cricket World Cup, which South Africa had just won, the Test World Cup. This month you've taken the theme of
market flicks. So obviously watching what's going on in the markets and the news, etc. Sometimes you get a feeling that you're a bit divorced from reality, that you are actually watching a movie from Hollywood. And if it's things that Trump is getting up to, if it's the fact that he fires ahead of his labor statistics, he threatens to fire the chairman of the Federal Reserve. There's just so much happening, and there's so many headlines that we thought this month's got to be market flicks.
And the first thing you looked at was a classic, and boy, is there rain, and that's Singing in the Rain, and that's returns of specific countries.
Yeah, correct. I mean, Singing in the Rain was appropriate, we thought, because markets were once again up in July. World equities, largely driven by the US and China, were up about 1.5%. And you take a step back and you think, gee, markets are reaching all-time highs, but there's still a lot of noise, a lot of uncertainty out there, and hence we think there's a bit of rain to look out for.
Yeah, and it showed China disappointed, I'd imagine, with 3.9%. That's kind of their new normal. I think those days of 8 and 9% are over as the economy matures a bit more.
Correct. Always got to divorce yourself between what happens in the economy and what happens in the stock market. Over time, you would think they're quite correlated, but over the shorter to medium term, they're definitely not. So in terms of the Chinese juggernaut that we used to, certainly over the last decade, that has slowed over the last 3 years. There is concerns there with their property sector specifically. But funny enough, the market in terms of the Chinese stock exchange was actually had a good month last month, and they were up about 3.5% in dollars.
Okay, and even in dollars, South Africa, positive.
Correct. So after a few months of a weak dollar, the dollar was actually strong. So most countries, when you convert it to dollars, were actually negative. But barring, as I said, China, the US, we were slightly up as well. We're up about 0.7% in dollars, and in rands we're up about 2.3%.
Okay, so we know that we recently had the all share get through 100,000, the psychological level. It doesn't mean much, but it means a lot, just those psychological levels.
Correct. Markets around I wouldn't say around the world, certainly the US market, South African market, and some other markets all reaching all-time highs. It's time to think about, should you be taking some risk off the table, or what's that classic saying? I think it's pigs get fatter, but hogs get slaughtered. So you've got to always guard yourself against being greedy.
Yeah, and certainly looking at our movie there with the US, we didn't have Despicable Me, we had Despicable T. That was President Donald Trump and his tariffs. Don't know if the despicable is Trump or tariffs, but either way it boils down to tariffs in place for lots of countries and quite high.
Correct. We'll leave it to the audience to think if it's Despicable Trump or Despicable Tariffs. But, tariffs is very, very topical, and rightly so, and it has big impacts through many, many regions, and certainly South Africa as well. So generally, when you up against what is potentially a bully, you would like people to be in alignment. But what you saw at the end of the month is the EU, Japan, Vietnam, UK, all coming to agreements with Donald Trump and that administration, and that I think was beneficial for the market, because the market, in the short term, certainly doesn't like volatility and uncertainty, and at least there was some steps forward in terms of knowing what the roadmap is going forward.
Yeah, and another thing, David, just sticking with this, because obviously it's big news. We had early August, our tariffs are in, it seems, at 30%, maybe 40% because of BRICS, so on and so forth. But there's an interesting thing that I'm wondering with regards to the tariffs, and that is that it's it's forcing countries to think about the deals that they're doing and the offerings they're making to a big trading partner like the US. It feels to me that looking at what our Department of Trade and Industry have been sort of had to do, the exercise they've had to go through of coming up with a deal that might satisfy the US, this is not a bad thing. That we almost been forced to think about our trading positions, what we offer, what we get in return, etc. Because, to me, as an observer, not an investor, and that's why I'm asking this to you, is what you think about it, is that it feels like for the first time that South Africa is kind of thinking about its trade. For a long time, we've just carried on, and there's been no real trade policy, no real innovation, no real ideas as to what are we selling, does the market want what we're selling?
Correct. I think the phrase "never waste the opportunity of a crisis" is probably what we face here. And yes, I don't want to downplay what the direct impact it's going to have on certain sectors and certainly jobs, which is certainly what the country needs. But going forward, as you said, we've got to find new routes. We've got to find new routes to market the trading partners. And flipping that around, the US might think they have certain wins over the short term, but just as you said, South Africa is looking for how to play this forward. It is a catalyst. Every country is thinking about this.
Yeah.
So in the long term, how reliant will the world be relative to today on the US in 5-10 years' time? And I think exactly what you said, it's not just South Africa thinking that, it's every industry trying to work out how do I diversify my way from the US consumer.
Yeah. Now, the big fight within America has been Donald Trump taking on his chairman of the Federal Reserve and the wolf of Fed Street, and that is Jerome Powell, who seems to be relentlessly hunted down by Donald Trump, and he's fighting back. He doesn't want to go.
Yeah, I think if you asked me for one job I wouldn't want in the world right now, that would be that job. Not that I'm qualified for it, but I think he's between a rock and a hard place. He's got sticky inflation. Inflation isn't near the 2% that he's been targeting. Up until, let's say, the end of last week, he had strong growth numbers. So he's trying to solve for bringing inflation down in the midst of good labor market numbers. And, he's trying to get that balance is always difficult. And you could see by what was happening in the Fed minutes, there was a little bit of dispute and debate around what the right path was. They made a decision and not to cut rates, and then 2 days later they came up with terrible job numbers. So that adds fuel to the fire, and he'll be under more pressure. And it's certainly, you appoint a person to follow a policy, but at the end of the day, it seemed like it's a lot more about politics as opposed to sticking to a mandate.
Yeah. And there is that wonderful old saying that the job of the chairman of the Federal Reserve is to take away the punch bowl when the party gets started, isn't it? His job is to not get things get too exciting.
Correct. I see a lot of irony about it, because Trump is saying drop interest rates, they should be at 1%, which I think is ludicrous to go that low. But, the US consumer has actually done well. The American stock market has done well. It's like they're crying about being in such a difficult position. But if you look at the numbers, the rest of the world would love to have the problems of the US market and the US consumer at the moment. They're in a really healthy position. Their growth is good. So there's a bit of irony in terms of some things that I can't reconcile is, why throw more what did you say? Punch in the
alcohol in the punch bowl.
Alcohol in the punch bowl, because they certainly are parting as things stand.
Pretty hard, yeah. In actual fact, when in preparing for this, you think to yourself, our Federal Reserve chairman equivalent, which is our the Reserve Bank governor, he's pretty much got a fight on his hands as well. And he's also holding the line between people that want to drop interest rates, but he's got to sit with other issues like a declining currency and inflation and so on in South Africa.
Absolutely. In fact, I think that dynamic was one of the big standout points of last month, where in the last MPC meeting, they specifically said they're targeting 3% inflation as the number to direct what policy they're going to do. And that's not, usually previously it was the midpoint between 4 and 6%. Now they're targeting as low as 3%. That means real rates will be higher for longer. That has enormous implications for the South African consumer or borrower or saver. And to the extent to which treasuries are aligned to that policy, I think there's going to be further conflict with regards to that.
Yeah. Now, to go back to America and the movies, we're going to watch this Rocky climbing those steps. Right, and this is a potentially terrifying movie. Almost become from one of the most heartening movies. It becomes a bit of a horror movie, and that is to look at U.S. debt levels. 2010, $13.6 trillion. 2015, $18.2 trillion. 2020, $26.9 trillion, and now U.S. debt levels sitting at $35.2 trillion. These are enormous numbers.
Enormous numbers. And this is the biggest worry and issue, I think, of all investors, how they're going to reduce that debt and how they, what it means for generations going forward. And Trump's policy and the U.S. current administration policy is they're going to not cut spending. They're not going to raise taxes. They're going to try to grow themselves out of the hole. They're doing whatever they can to try to increase the GDP of the country, which means your debt relative to the size of the economy will be more stable or hopefully shrink. And if that goes wrong, and if there's a misstep in terms of policy, etc., I think that can have significant implications down the line for investors.
Yeah, it is an issue that we'll come back to that in a second. Show me the money, Jerry Maguire. Where there's one company that's been shown the money, and that's Nvidia, the chip producer.
Correct. I think it was up about 20% last month. It's the first country in the world to have a market cap of 4 trillion. It's now, I think, 4.4 trillion as things stand. So certainly an amazing success story driven by AI, etc., and the demand for their chips. But it's not just Nvidia, it's the other big AI mega cap companies that had a really good month last month. Google, Meta also really doing well and driving the US market.
Our pirates of the cash and beans. These are the some of the things that have done well, some of the commodities, if you want to call them that, or the reserve stocks and resources that one can hedge against. Bitcoin continues its march, up 7.8%.
Correct. Bitcoin and cryptocurrencies tend to get a bad rap by certain sectors and people. I certainly haven't been investing our clients' money in Bitcoin, and that's been a missed opportunity, but that's for different reasons. But, pirates of the Caribbean, a lot of people think that, you use those kind of cryptocurrencies for different reasons, harder to regulate and see where the money goes. So that's why we went with that title. But still, reaching new highs in terms of Bitcoin, and gold and platinum for South Africa has been, probably not last month, but certainly for this year has been a major beneficiary for our market.
Yeah, they just took a pause in the last month, down a little, gold down 2%, platinum down 9%. That's after tremendous increases. One shouldn't get too concerned about that, I wouldn't imagine.
Correct. Certainly with platinum, I mean, down 9% is massive, but in the context of a significant rally that has had year to date, you could understand a pullback.
Yeah, and then, of course, you couldn't help yourself. Catch me if you can. Venturing into the politics, Mkhwanazi and Mchunu, these guys kind of pointing fingers at one another.
Correct. I mean, politics is certainly not really our focus in terms of being critiques or understanding that world as adverse as others. But, when you have your police commissioners and infighting, it doesn't bode well for being, having confidence in your institutions, etc. So that will obviously lead to potentially inflows from foreign investors and things that indirectly does impact our market. So hence we thought, let's put that in our reports as well.
Because, looking at the South African market, which is where you're most active, Serafina Tactics, the SA returns and Serafina SA part there. Equities up 2.2%. These are in rands. Bonds up 2.7%.
Correct, and that continues what we said last month. South Africa, with all its problems and all the naysayers, have actually delivered really, really well. I think over the 5 years now, it has actually outperformed global equities, which a lot of people actually don't realize. And when you look back at a 5-year return, you're always going to think, what's the starting point? And that was just after inflation, after COVID. So we obviously had a big pullback in our market, but South African assets have done well for investors.
And we had some top guns. Sasol up 19%, Sibanye Stillwater up 18.9%, and British American Tobacco up 14.7%.
Correct, all for different reasons. Sasol obviously benefits from the oil price, and they came out with pleasing trading results and operations statistics, so that fueled, excuse the pun, their rise. With regards to British American Tobacco, they also came out with good trading results. I think their smokeless products have beat estimates in terms of volumes, so their good trading update was obviously beneficial for their stock. Because
I mean, a company like British American Tobacco, they've got the resources and the finance to pivot. If people are moving away from cigarettes, they can go into smokeless stuff. They can move quite quickly with lots of money.
Correct, and thank goodness for their sake they did do that, because they have been investing heavily in those products. But I think the whole smoking, even if smokeless, there's still a long road to go. There's still some question marks in terms of its safety. So certainly they have pivoted. Hasn't been easy. But then it's starting to benefit from that pivot.
And I'm sure cannabis is their next frontier. And then Armageddon out of here. Mondi down 14.8%.
Also, they came out with a difficult trading update. So over most short to medium long terms, share prices following earnings. If earnings are coming down, then generally your share price will come down. So that was the reason why Mondi pulled back.
And if the tobacco company goes up, it's sad that the alcohol company goes down, AB InBev, people are literally drinking less.
They are, and they're switching to different products. I think the whole industry, wasn't just AB InBev that had a difficult a month. The whole beer market is a bit more under pressure. The whole alcohol market is under pressure. Volumes have certainly decreased globally, and that was the reason why they struggled last month.
Yeah, and Richemont down 10.6%.
Largely on the back of tariffs and question marks of China. China's their biggest market by far. So, until that certainty is resolved, I think that Richemont will find it a little bit more challenging.
David, moving away from the report itself, just some questions there. Should investors start taking some money off the table?
So investing is never going from all in to all out in a straight line. You've got to move it as the facts and the conditions change. And you must also realize why you're investing and over what period. If you're investing over the long term, then you do need exposure to risk assets, because over time, risk assets provide you with real returns way above inflation. Having said that, we think, and particularly looking at the US market, where valuations relative to its own history and relative to the rest of the world are way above history. Certainly from a Corion perspective, we think a little bit more prudence is appropriate, and to start trimming some of your gains and going into more defensive assets would be appropriate.
Yeah, and obviously a lot of performance is going to be related to global economics. We mentioned tariffs. South Africa is an economy that's going to feel the tariffs, but there are other markets open to us that perhaps in the past we weren't so energetic in going after.
Correct. And I read a report a couple of days ago of trying to break down the impact of tariffs. So a lot of our trading with the US is in terms of our minerals and resources, which is largely tax exempt. Then the second biggest contribution is our automobile sector. There, they've already announced new trading partners. So you're left with about 30%, 30% of our trading with the US, which will be under pressure. So it's not probably as bad as the headline suggests, but 30% does affect underlying industries quite hard, and certainly probably the agricultural industry, just to name one.
Yeah, and it's going to be a true test for the US economy, because ultimately the tariffs themselves will get carried by the US consumer, because the price goes up. So, for example, if they're buying this fine bottle of water from South Africa, the prices went up by 30%, and it's a question of, the person on the other side adds 30% to the price.
Correct.
You're still getting your 10 Rand for the bottle of water, but it's costing 13 Rand to land it in the US in that example. It's the US consumer that's going to pay for that tariff.
Without doubt. I probably might not pay for all of it, but if the consumer doesn't pay for it, then the companies are going to reduce their margins. So either profitability of corporates will take a little bit of a knock, or it goes directly to the consumer. It generally does end at the consumer, but there will be a blending of who takes that pain. But just the headline that we're raising revenue by these tariffs is not the full story. There's obviously the impact that it has for the man in the street.
Yeah, and I mean, this whole tariff discussion is quite it's a deep one, because I think what's going through the minds of the Donald Trump administration is that in that example of the 30% tariff on this bottle of water, is that some US producer might then step in place of the South African producer in that case. And that can happen in certain respects, but there's certain respects where it can't happen.
Correct. I think they are a little bit mindful of that. They're not going to impose high tariffs on areas where they can't manufacture. I mean, if they don't have certain products or climate or whatever it is, you would think that they've taken that into account, because you've got to source where the product is available. So it will affect different industries in different ways.
Yeah, and it's quite fascinating, because South Africa sits with one of those situations where we provide a lot of citrus to the US, and the US itself produces a lot of citrus, but we fill the gap in their winter. So they kind of need our citrus, or citrus sometime, from somebody who witnessed in their winter, else they're not going to have orange juice in winter, and that's never a nice thing. So it's going to be an interesting thing, and it's going to be fascinating to see when these tariffs start showing themselves through in American pricing and American inflation.
Correct, and I think that's what Jerome Powell is worried about. I mean, that's exactly what he's worried about. It takes a bit of time to work out how companies adjust and what the final impact would be. So that uncertainty is certainly not just on his mind, but it's on all investors' mind, because that's still got to play out.
Now, David, I want to talk about the work that you do at Corion. You invest money on behalf of primarily South African investors. What's the mood like?
So, from our lens and the way we see it, is the more uncertainty, the more volatility, the more opportunity there is. For a firm such as ours that look after about 20 billion rands of retirement fund savings, we seem to think that we're in the Goldilocks position. We're not too big, we're not too small. When there's volatility and when there's opportunity to increase or decrease our exposure to certain asset classes, when assets are moving quite quickly as they have been, it provides us with the means and the opportunity to take advantage of it. So the mood, I would say, is uncertainty, but with uncertainty comes opportunity.
Yeah, and we South Africans are not unused to dealing with uncertainty. It's a kind of default position.
Correct, and we seem to be a bit bearish in terms of our environment. But if sometimes you look at the facts and you look at the figures and you take a step back, every country has challenges, and from our perspective, you compare ourselves to other emerging markets. We're not completely out of line. And in some cases, we got better institutions and better infrastructure. So, if things are priced for a pessimistic outlook, but you can see cash flows and earnings coming down the line, then take advantage of that.
Now, as we look ahead, I'm going to ambush you here a little bit and say, what is potentially a positive thing that could happen for the South African asset market for investors, and what is a potentially negative thing that could happen, that's sitting on your radar as potentially stuff that could hurt and stuff that could help, or the vice versa?
Let me start with what would hurt. I think certainly monetary policy and populism would hurt the markets the most. When you see rhetoric about throw inflation targeting completely out and loose monetary policy, you've seen that movie before. And as we're talking about market flicks, it's a bad movie. We've seen it in Zimbabwe, we've seen it now in Turkey. Monetary policy and populism is certainly the biggest worry, certainly from a Corion perspective. I don't think we're there yet, but I'm just saying that you always got to...
No, that always sits there. That's always a gun in the cabinet, right? And that in this country.
Correct. And then in terms of the positive, I think getting service delivery in this country and the right people and the right jobs, and I think that will be a major boost for the country. And watching how that moves, I think we have some successes, and we're seeing that roll out to some extent in certain industries, but not nearly as quick as one needs to really have a meaningful impact in terms of the infrastructure that this country requires.
So looking at the month ahead, no reason to panic. Stay there for the long haul. South Africa is somehow navigating our way through these choppy waters.
Correct. I think you do have to move your portfolios where you've benefited significantly and where valuations are stretched, as we mentioned earlier. But on the whole, South Africa as an asset class and investment region still shows a lot of opportunity. We still have bank shares, financial shares, some diversified mining shares at very low price to earnings ratios, and with a reasonably good outlook going forward. So no reason for panic as we see it.
So, ladies and gentlemen, if you want to get the Corion Report, David, they go to your website, right?
Correct. www.corion.co.za. You subscribe to the Corion Report. You can also subscribe to our videos. What we do at Corion is try and simplify the world of investing and add the odd humor here and there, at least attempted humor. So we've had very good feedback. There's about 8,000 people subscribing to our videos, etc. So hopefully we're making life a little bit easier.
Well, ladies and gentlemen, if you've supported the State of the Nation, you definitely have to show some love to the Corion Report. Go and get their report. Believe me, it's a great read, and it sort of focuses you on stuff that you need to know for your own investment future. To David Bacher from Corion, thank you for joining us. To everybody that watched this today, I hope you enjoyed it. Join us again on State of the Nation Business and subscribe to the channel. We'll see you again soon. Thank you very much.